Pretty good start to the week. The markets were up this morning right out of the gate. Pretty good reason this time around. The U.S. stocks, they gained after President-elect Donald Trump announced his choice for the Treasury Secretary over the weekend. Unlike a lot of his other picks, which have been controversial, investors are pretty optimistic here about this choice. I want to break down in this video what's going on and what it could mean for your investments and for the economy. So here's a snapshot of what happened this morning. You'll see a pop in this morning's prices right out of the gate. The Dow Jones jumped about 460 points. That's up over 1%, but it has pulled back a little bit, still about 0.5% up at the time I'm filming this video. The S&P 500 was up almost 1% out of the gate. The Russell 2000, so this is focused on small cap stocks, that led the pack with a gain of almost 2.5%. Initially, it's trading up about 1.5% right now. So what's behind these numbers? Well, a lot of the market rally centers around Trump's nomination of Scott Bessent. He is the founder of Key Square Group. He is seen as a positive pick, especially by those who are hoping for a pro-business pick, a market-friendly approach from the incoming administration. And this is especially significant here because investors do believe en masse here that Bessent's background as a hedge fund manager will give him the tools, make him well equipped to navigate economic policies. Very importantly here, I would argue probably most importantly, a lot of people are also optimistic that he will act as a bit of a moderating force on Trump's more aggressive stance on trade and tariffs. I want to look at something that Bessent himself said in a recent interview, literally around Election Day, long before this pick. Here's what he had to say.
The Federal Reserve, in their Teal book in the summer of 2017, said that the Fed should look through tariffs. And my view, and I don't have a say now yet, or maybe ever, but is that I would recommend that tariffs be layered in gradually, which would the price adjustment would be over a period of time. But I think if you take that price adjustment coupled with all the other disinflationary things President Trump is talking about, that we're going to be at or below the 2% inflation target again.
So if it ends up that he does have this positive influence on Trump, this far more measured approach could reduce the inflationary risks and align more with the Federal Reserve's 2% inflation target. Let's have a look here at what this might mean for policy and for the economy. First off, investors are betting, obviously, that Bessent's leadership will prioritize growth-friendly initiatives. So if we peel back and look at the big picture here, let's look at tax cuts and deregulation. If Bessent backs broader tax relief and especially energy deregulation, it could give U.S. industries a significant boost. Then we look at this trade and tariffs issue that seems to be at the front of everybody's agenda right now. If he is in fact successful at moderating Trump's more protectionist tendencies, he could prevent the kind of sweeping tariffs that might disrupt global trade. From a perspective of GDP growth, if they do get these measures in place here, we could expect a stronger GDP growth. That would be a clear win, obviously, for the markets. Now, still, it is worth noting, it's important to note here that any major missteps on tariffs or on trade policies that could create some headwinds that could derail any of these positives. The big question to me is this optimism justified? And we know that the markets often react quickly to new developments. That's what we're seeing this morning. The true test here, though, will come in how these policies are implemented. Will Bessent be able to navigate this very fine line here between the pro-growth policies and then avoiding any major trade wars? Also, it's important to watch here for updates on inflation and the Federal Reserve's responses. If inflation falls below the 2% target, as he in fact predicts, the Fed might have more room to keep interest rates steady. Now, if we look ahead, the next few months are going to be crucial in this equation here. If Bessent does deliver on market expectations, we could see continued gains in the stock market, the broader economic momentum. However, the rollout of each of these policies is going to need to be handled very carefully to avoid any unnecessary market volatility. Do you have an opinion on what's happening here? Do you think that Bessent's nomination will bring long-term benefits to the economy? I'd like to see your thoughts. Drop them in the comments below. There's a lot of volatility in the markets these days, and more investors are looking for a way that they can combine steady income with long-term potential growth. I want to introduce you to the Harvest Healthcare Leaders Income ETF. The ticker is HHL, that trades on the TSX, and it could be just what your portfolio needs. This fund has a proven track record, and catch this, HHL has paid monthly distributions since its inception and has now surpassed the $500 million mark in distributions as of October 31st, 2024. The fund provides exposure to 20 of the world's leading healthcare companies, and these global innovators drive value by creating new drugs, treatments, and technologies that meet consistent demand. From biopharma to advanced medical devices, these companies are at the forefront of a very, very vital sector. And to top that off, the healthcare industry is uniquely positioned for growth. It's fueled by aging populations, rising healthcare spending in developing markets, and breakthroughs in technology like GLP-1s and biotechnology advancements. You can add stability and innovation to your portfolio with HHL. Visit harvestportfolios.com/HHL to learn more and see how this fund can help you achieve your financial goals. I will put a link in the description of this video. Quickly, also, before our next story, I'm thrilled to announce in just a couple of weeks, Brandon, and for those of you who don't know, he's my son. He's the founder of this channel. He will be sitting down with a Canadian legend. This is former Dragon's Den star and best-selling author of The Wealthy Barber, David Chilton. Now, this is a completely free session. It's Tuesday, December 3rd at 6 p.m. Eastern, 3 p.m. Pacific. This is one session that you don't want to miss. I will put an RSVP link in the description below. If you want, you can pause the video right now, sign up for that, and then carry on. How often do you sit down and wonder where your fruits and vegetables come from? Probably not often, but a lot of Canada's fresh produce, of course, is imported from the US. So when there are big changes that are happening down in their farming world, that can hit us too. Right now, the US farm groups, they're asking Donald Trump's administration not to deport undocumented farm workers because nearly half of their 2 million workers apparently don't have legal status. They're saying that if these workers are forced to leave, then farms could struggle to keep up with production. That would end up sending grocery prices higher there and also here in Canada. Tom Homan, he is Trump's new border czar. He says they will be focusing on deporting criminals first, but he hasn't made any promises to leave farm workers alone, and that has gotten a lot of farmers nervous. I honestly understand that. If U.S. farmers have fewer workers, they're going to produce less, and Canada, which relies on those imports, will probably have to pay more for the same food. That's something we don't want to see there. We think of things like staples, fresh fruit, we think of vegetables, even meat. The prices here could creep up because of the labor shortages south of the border. U.S. farms, they do have a program for hiring legal seasonal workers, but the thing is, it only covers about 20% of their overall labor needs. Now, David Ortega, he is a professor of food economics and policy at the Michigan State University, and he backs the need for foreign workers to remain on the job in the U.S. He says they're filling critical roles that many U.S.-born workers are either unable or unwilling to perform. And then you look at John Walt Boatwright. He is a director at the American Farm Bureau Federation, and he says that farmers need more reliable programs to keep food flowing. He says we need the certainty, reliability, and affordability of a workforce program and programs that are going to allow us to continue to deliver food from the farm to the table. And that's the same story for us here in Canada. We're all part of that overall supply chain. The bottom line here is if the U.S. makes farming harder, we're likely going to feel it here at the checkout line. Grocery prices, of course, are already high. Labor issues south of the border might be a big part of that problem. A quick update here from a potential rail strike. Back in August, CN and CP, they saw their operation shut down for several days amidst a work stoppage by 9,300 engineers, mechanics, and yard workers. That ended with federal intervention. Now, uniform members at CN, they've authorized a strike if a deal isn't reached by January 1st. And this time around, the union is representing over 3,600 workers. They reported an overwhelming vote in favor of strike action to secure their demands. Now, one group is comprised of 2,100 mechanics, technicians, crane operators, machinists, and electricians. The other group includes 1,500 administrators and customer support staff. Unifor says that 97% and 96% of these two groups respectively cast their ballots in favor. So this vote obviously strengthens the union's position as negotiations are set to resume. They're going to run through till December the 8th. Now, talks initially began back in September with Unifor prioritizing higher wages, improvements to the pension plan, and job security for its members, which include car technicians and heavy-duty mechanics. Unifor emphasized the importance of the vote in sending a clear message to CN about workers' resolve. In a statement, the union says, "This overwhelming vote sends a clear message to CN that our members are united and prepared to take action to achieve the fair treatment and respect they deserve. Our members have had enough of concessions that erode their rights and livelihoods, and they are standing strong to demand a contract that reflects their value and the critical role they play in CN's success." Now, at the time that I'm filming this video, CN has not commented on the strike authorization nor on the ongoing negotiations. That is a wrap for today's video. I will be back in a couple of days on Wednesday with an update. As always, thanks for watching. We'll see you in the next video.